Thank you very much. Welcome to the Halftime Report. I am Scott Wapner, and we are outside of Levi Stadium in Santa Clara. It is the site of Super Bowl 60, and you can bet we're tracking the markets today as well, which are higher, including the NASDAQ. Amazon, though, wow, it is getting hammered after its earnings. Yet another victim of big spending concerns. And it has been a brutal week for many names, including Nvidia, which was down about 10% over the last 5 days, though it is getting a very nice snapback today. And speaking of, coming up, an interview with Nvidia CEO Jensen Huang right here in the company's backyard. Crypto a focus today as well. Bitcoin's big beatdown of late we will discuss. And we'll discuss all of it as well with Altimeter's Brad Gerstner. He is with me for the hour today. Also joining me, the investment committee, Josh Brown, Steve Weiss, and Malcolm Etheridge. We do want to begin where we always, of course, do, and that's by looking at the markets, which look a lot different than they have for the past few days, as we're getting a nice rebound. And Brad, I'll turn to you. I mean, big tech had $1 trillion wiped out on these spending fears. What were you thinking about over the last few days, and what should our viewers take from it?
Yeah, I mean, it surprises me how surprised the market was. I feel like this had been well telegraphed. But you're right, $100 billion of incremental spending by Google and Amazon above and beyond the consensus expectations on CapEx is pretty extraordinary. But listen, you know, we're going to hear from Jensen later. $650 billion to $700 billion of spend out of the big 5 companies in the U.S., and they say they're still token constrained. The reality is, Andy Jassy said last night that he has demand coming in over the bow. He can't fulfill the demand. It's high ROI. So he's going to get a big return on this. They need to make the investment. The beneficiaries, I think, are all the people who are building the infrastructure and the chips in order to enable us to advance AI.
Does the rebound today suggest to you that the damage has run its course to this point, or are we just susceptible at any moment with any headline to have the similar reactions that we've had over the last few days?
Well, listen. You know, one of the themes I think we got to think about is when the rate of change goes parabolic, and that's what we're seeing today with AI. There's a fog of war, and when there's uncertainty in the markets, discount rates go up and multiples come down. People start questioning terminal values, and that's why valuations change even before numbers change. Let's be clear. Google's numbers were spectacular. Amazon's revenue growth, spectacular. Microsoft only missed by 100 basis points and had incredible Azure growth. The world is desiring to consume a vast amount of this AI resource. It's a struggle to keep up building it.
All right, they still got some work to do to get ready for the big game on Sunday. So from time to time, those are the sounds that you may hear outside of Levi Stadium. But Josh Brown, I'll turn to you. It's been a pretty brutal week. Yes, we've come back, but the losses are still not pretty to look at for all of these hyperscalers, and in some cases a little bit beyond that. What's your take?
Well, first of all, I can't lie. I'm a little bit salty. You and Brad are about to have a way more fun weekend than I am. We still have residual ice in the driveway, and you guys will be at the game. Here's what I noticed this week, yesterday, and I was on the show yesterday, adding to some of my software victims. You don't have to buy these stocks. But if you were out there as an active seller yesterday and you did not have a margin call, you're a donkey. I'm not saying it's the low, but consider this. Microsoft was in a 30% drawdown from its high, RSI 24. Palantir, RSI 26 in a 40% drawdown. Oracle, 61% drawdown, RSI 20, almost in the teens. CRM, 20 RSI. INTU, Intuit, 20 RSI. Adobe, AppLovin, you name it, Palo Alto, 20 RSIs. For the people that are investors, not traders, RSI is relative strength. 30 is oversold. 20 is, oh my God, what the hell is going on? Are we having COVID again? So the sellers yesterday, I'm not 1,000% sure what they were thinking. The only thing I could guess is either a gun to their head from a margin clerk or they have no idea what they're doing. So the bounce today makes sense, and it's across the board. It's gold and silver. It's Bitcoin too. These things have nothing to do with AI disruption. It was just an absolute puke. Momentum bottomed out. We could sort of rebuild here. So now the question is, did you like every name on your sheet? Like, were you looking at some of these stocks and saying, why do I even own this in the first place? If you're up 10% off that low from yesterday, that tradable low from yesterday, today is a better day to make some decisions. Maybe I want more Microsoft and I want less Oracle. Okay, it's not ideal, but like, we should not be selling stocks at 20, 21, 22 RSI. That's just literally giving in to the algorithms, who are probably doing a better job at catching those lows than people are.
I guess, perfectly picking up where both Josh and Brad left off. You are an Amazon shareholder. You bought more on this sell-off because you obviously think that it's overdone. Andy Jassy says they have the fastest AW growth in 13 quarters. This is not necessarily how you would expect a stock to react, other than caught up in the whirlpool of spending concerns.
Yeah, it actually is the way that I expected the stock to react before we went into the print yesterday. And I think that one of the things we have to come to terms with is that the market dynamics have shifted since COVID in such a way that retail investors are actively trading a lot more than they used to be. There's a ton more information out there. There are a ton more tools out there. Trading is free. And so the market having this reaction where it sells first and then decides what to do after the fact, I think we have to accept that that really is just one of the dynamics of how the market's going to work. So I expected that this company that I already thought was under-owned long before coming into this week, it traded down about 15% into the open this morning after its print yesterday. I already loved the stock where it was, so it made perfect sense to me that I would want to add more shares now, considering all of the things that we've talked about, including the fact that Amazon's got a $200 billion backlog that they're talking about having to figure out a way to work their way through. Well, that explains why it's so important to them to spend so aggressively to ramp up to be able to meet that and capitalize on as much of that as possible.
Malcolm, hold your thought, and everybody hold yours as well. Let me go to Washington quickly for some breaking news from our Eamon Javers. Eamon, what are we learning?
Scott, that's right. We are learning now that the White House has taken down that racist social media post from President Trump's Truth Social account. And remember, the post went up shortly before midnight last night, and what it showed was a video about the 2020 elections, which ended with a quick cut to a cartoon image of Barack and Michelle Obama depicted as cartoon apes. It was widely criticized throughout the morning as racist, including by Senator Tim Scott, an ally of the president up on Capitol Hill. And now the White House has taken that image down from the Truth Social feed. And the White House says, a White House official emailing me a short time ago saying, a White House staffer erroneously made the post. It has been taken down. So the White House confirming that that image has been removed from the president's feed and saying that a staffer erroneously made the post. Scott, back over to you.
After, it's worth noting, Eamon, the White House first calling the anger about the post fake outrage.
That's right.
But it reached, I suppose, a crescendo that they had no choice but to take this down.
That's right. Caroline Leavitt put out a statement earlier in the morning saying this is not racist. In fact, all it is an image of President Trump as the king of the jungle from The Lion King. It's a perfectly fine meme, and anybody who's complaining about it is guilty of, fake outrage. Then you saw Senator Tim Scott, who, of course, himself is African American, come out and say this was the most racist thing he'd seen out of the White House and that this post should be removed. Now we see the post being removed, notwithstanding Caroline Leavitt's statement that it wasn't racist in the first place.
Okay, Eamon, appreciate the update from you down in Washington as we'll get back to the business at hand, and that continues to be reacting to those earnings and the sell-off in Amazon, which Steve Weiss takes me to you because you own the name as well.
I do. And, yeah, maybe the selling's overdone, but let's keep in mind that stocks trade near term on performance relative to expectations and longer term on fundamentals. So even though there was good growth in the quarter, the guidance was a little disappointing. The spend, of course, was much more than anybody was looking for. So that's what's impacting the stock today. This is a stock that's underperformed for the last year measurably. So I'm not selling any. It's not one of my larger positions. So I'm not getting hit there. I'm suffering enough pain on my larger positions, such as Meta, but not making any changes there either. So, throughout my career, to Brad's point, I've always bought the companies that are the beneficiaries of CapEx. and come back into the ones that have been the expender of the capex when that cycle is near an end. The issue here is that we don't know where it's ending. The other issue is that the technology is moving so quickly that we don't know if the money they're investing in the technology today will turn out to be great investments going forward. Now, if you parallel it to what happened with the internet, that was basically one technology. Sure, there are innovations to it, but we didn't see wholesale improvements, as we saw with Anthropic this week, that said, hey, what about those decisions? Are they the right ones? I think to some degree, Microsoft happens to be, the victim of that. Now, coming into this year, and even last year, I thought Microsoft would be the #1 beneficiary of AI, and that has been wrong. So the stocks underperform. That's the one I'm most uncomfortable with. I'm not uncomfortable really with, with Amazon or the others. And I like the tool belt. I don't know if we'll get to this later, but I did sell the remainder of my FTAI aviation. I bought this stock up about 150% within a year, and I bought it as an airplane engine leasing company. Then they had this announcement, my target was 200, that they're now going to be making generators. And while I think the stock could still move higher, that was a tool belt company that I didn't expect it to be. So I thought best, hey, take your profits. But there are others,
Okay.
Caterpillar, a tool belt company. So that's how I look at the world.
Josh, you and I think we did this, did we not, yesterday? Looking at the destruction that's happened in some of the software stocks, you knowing the businesses that you own extraordinarily well, and deciding that I may not be buying perhaps at the bottom, but I'm buying more of the names that I like the most, still willing to place those bets and not stay away entirely. Why?
Yeah, this is the difference between having investments versus being long PLTU, which is the 2X Palantir ETF. If you're trading PLTU or you're trading strategy 2X long, you really have to nail the timing, and you really have to be picking up on, watching the VWAP and understanding what other traders are doing. And that's a completely different game. And I'm not good at that game. If you're an investor and you already know, I think that there's like a 5 or 10 year period where this company carves out a huge piece of the territory and ends up with all the cash flows in this space because they build this competitive position, this moat, this capacity of clients, et cetera. And you just say to yourself, I loved it at 32, now it's 27 because it's in some basket that's being liquidated by a margin clerk somewhere or a hedge fund that's looking to cut exposure or whatever. You sort of have an advantage in markets like this week. It doesn't feel like it in the moment, but if you're not highly dependent on nailing the perfect timing, you can rationally and calmly lower your average cost in select stocks, or add to things that you've been up in that you thought you'd never get a chance at those again. This is not news to people, but it's a good reminder a day like today. Things don't, you had 8 straight days down for the IGV. It's in a 20-some-odd% drawdown. So at a certain point, you just have to say, I like this company. I get that it's under pressure.
That's right. This is not an exercise or a game in trying to pick the exact moment. It's trying to anticipate something that may come to pass and trying to get ahead of that. Appreciate that conversation. I've got to go back to our headquarters now. Dom Chu has a market flash for us. Dom?
Yes, sir. Scott, what we have right now are home builder stocks on the move to the downside in a fairly significant fashion intraday, and this is all due to a Bloomberg report citing people familiar with the matter that the Trump administration and officials are exploring possibly opening up an antitrust investigation into U.S. home builders. This all amid a push by the White House to bring affordability back for Americans. This report goes on to say that the Justice Department could open the probe in the coming weeks. According to people familiar, no decision has been made, and that the administration may abandon the effort without launching an actual investigation. But that particular move and those headlines are causing those home builder stocks, as you can see, names like KB Home, Lennar, D.R. Horton, and others, as well as many of the big home builder ETFs, like the Spider Home Builders ETF and the iShares Home Builder ETF, all kind of moving to the downside, as you can see intraday. So we'll bring in more details as we know more here, but that's the reason why, Scott, those home builder stocks are on the move. I'll send things back over to you guys.
All right, appreciate you, Dom.
That's my camera right in front of me.
The Super Bowl here in Santa Clara, right in Nvidia's backyard. And we are joined now by the company's founder and CEO, Jensen Huang. Brad Gerstner is, of course, still with us as well. And I can't tell you how happy we are to have you. Thank you.
Thanks. It's great to be here. Welcome to Santa Clara. This is our backyard. I'm a mile up the road.
Yeah, I was going to say, you couldn't actually walk over here, but you're here. And you said you've never been here before.
Well, I've been not like this. Not like this. Look at all these tents. It's incredible. It's going to be a festival.
So it's an interesting time to have you, obviously, which any time is, but especially given what's been happening within the market. Today looks a lot different than the last couple of days have. The market obviously concerned with what's happening on the spending side of the hyperscalers and this big build out in AI. What's your take from that, the way the market continues to react to this?
Demand is sky high, and there's a fundamental reason for that. We're in the once-in-a-generation infrastructure build-out. This is the largest infrastructure build-out in human history, and there's a fundamental reason for that. Artificial intelligence is going to fundamentally change how we compute everything. Everything from database processing, the way we do search, the way we do recommender systems, the you shop, the way you watch movies, and of course these new agentic systems that are being developed and evolved. This last year, we saw an inflection point in AI. AI became super useful. No longer hallucinating, it's generating informed content, it's reasoning, it's thinking, it's doing research, it's able to use tools. All of a sudden, AI over the last couple of years went from being curious to super useful. The inflection point also came with it, profitable tokens. Anthropic is making great money. OpenAI is making great money. If they could have twice as much compute, the revenues would go up 4 times as much. I mean, literally these guys are so compute constrained, and the demand is so incredibly great. The number of enterprise users, the number of consumer users, the number of startups that are being built on top of these companies, it's just going through the roof.
So when you see numbers that are frankly remarkable, that $660 billion this year will be spent by the hyperscalers as we continue to learn, like we did from Amazon last night, you sit back and think to yourself, that's completely justified based on what you see?
It is appropriate and sustainable. And the reason for that is because all of these companies' cash flows are going to start rising. You know, people are comparing it to cash flows. One of those numbers are wrong. It's just the cash flow is wrong. We are addressing the largest software opportunity in history. For the very first time, software is not just a tool. A tool is like Excel. Now software uses tools. So these AIs use Excel. And so I think the opportunity for this new era of software is incredible, and we're seeing it already moving the earnings of Meta. Nobody uses AI better than Meta, and so if you look at the way that they're using AI went from a classical recommender system running on CPUs to now a generative AI agentic system that's making recommendations. Everything from the way social media works and the way they recommend ads and help advertisers create content has fundamentally been changed, and their earnings show it. And that's the reason why they're investing so hard. They see just a much larger future potential for it. And not just one company. This is going to affect AWS's shopping and the way they recommend goods. This is going to affect how Microsoft's enterprise software works. Every single company sees the same inflection point, and that's why everybody's leaning in so hard.
I feel like that's the point that it's an interesting point. It sort of turns the way you need to think about these businesses on its head. That if you're just fixated on the spending side, as you were talking earlier about, they're spending such a huge portion of their free cash flow, you're kind of missing the story. The market needs to get its arms around that. Do you as well as an investor?
Yes. If you turn the clock back, Scott, to 2008, 2009, right, Amazon could have taken their profits and sent them back to us by way of dividends. Instead, Jeff Bezos said, I'm going to invest in this thing called AWS. Think of it as digging a gold mine. You have to spend a lot of money to dig the gold mine before you get the gold out. These guys are digging the biggest gold mine in the history of software, right? But it costs something up front. Now the question is, do you believe Andy Jassy and Mark Zuckerberg and Sundar and Jensen that this opportunity is that big, or do you have a special insight that causes you to understand there's no gold in the bottom of the gold mine? as an investor, I'll just tell you this. I want my personal net worth, I want my fund's net worth levered against AI, because all human progress is going to be derived from machines helping humans think and augment human thinking. And so whether it's owning Nvidia, which is our largest public position, or whether it's Anthropic or OpenAI, all of these companies are going to be tremendous beneficiaries, and they're doing it at scale. There are increasing advantages to scale, right? And so I think it's hard for people to get their arms around now, just like it was in 2008 and 2009. But thank God Jeff Bezos did that. Now it's a $140 billion business generating $30 billion a year in annual profits that people criticized him for investing in back then.
It's incredible that OpenAI and Anthropic are $20 billion run rate companies, generating profitable revenues and accelerating growth all at the same time.
Right.
These are extraordinary things, and it makes perfect sense from where we sit.
How can we be so certain that the amount of compute we think we'll need and that we continue to hear from CEOs like you that we will need is actually going to come to fruition? Isn't it inevitable that we're going to, at some point, overdo it, but we're not going to know that until it's too late?
It's not like roads. Roads, once you lay it down, it stays fairly useful for a long time. The way computers work is you build up the infrastructure, but then you start replacing it 5, 6, 7 years later. And so I think it's going to take us some 7 years, 8 years to build up to the level that we have to sustain. And after that, we're going to be refreshing and slightly growing. And so we've got several years of build out ahead of us. The important thing is this. You have to go back to first principles. Computing has fundamentally changed. It used to be pre-recorded. Excel and PowerPoint and all these tools and all this software is pre-compiled. They compiled it and they send it to us. The way software works now, because it's contextually aware, every single time you use it, it takes into consideration the context, who you are, what you're asking about, what's happening to the world, what other information you give it, the context. And every single context is different and every single response is different. So from now on, every single pixel, every single beep of a sound, every video that comes out of the computer is generated in real time. And that's the reason why we need computers to operate software at such a large scale going forward. And all these tokens are what we call intelligence. And for the first time, we're generating something of tremendous value, intelligence as numbers. And these things, as I mentioned earlier, this last year, we went through an inflection point because these tokens became profitable. And so we just have to make more of it.
Can you blame, in some ways, investors who have PTSD from the last time tech went through this revolution and evolution at the same time for seeing certain things that remind them of then and worry that they'll happen again?
It's good to always reflect on history. History informs us, but history doesn't repeat. And so you have to take into consideration what's actually happening. Always go back to first principles and think about what is actually happening. Right now, the fundamental difference, a huge difference between now and some things that happened in the past with the internet, there was a ton of dark fiber. There are no dark GPUs. 100% of the GPUs are rented. In fact, GPUs that we sold 6 years ago, the prices are going up. It's not like it's antique. I mean, it's incredible. It's like a fine wine. The demand is so high that GPUs I sold 6 years ago are going up in price. And so I think the demand is just incredibly high for the reasons that I just said. One, we went through an inflection point. AI has become useful and very, very capable. Two, the adoption of it is incredibly high. And three, because these AIs are thinking, the amount of computation it needs is great. And so to the extent that people continue to pay for the AI and the AI companies are able to generate a profit from that, they're going to keep on doubling.
You get asked about the bubble question all the time, but to Jensen's point, back then, you're wrapping fiber around the earth 5 times and you realize, well, that was a little too much. Yeah. How are you thinking about that question relative to how he answered it?
It turns out that fiber had 7% utilization. We called it dark fiber because we knew when they were putting it in the ground, it was dark. We're building for the future. And we were borrowing money to do that. And we only had 30 million people connected to broadband internet. Today, we have billions of people who are using this, getting benefit daily. But one of the things I would say, Scott, is one of the questions here, Jensen, is, okay, if you accept that all of this needs to be built, there's a lot of chatter. Andy Jassy said last night on the Amazon call, yeah, but we have an inference chip that's 40%, costs 40% less. There's a lot of talk about all these other chips. So how are you confident that NVIDIA is going to continue to maintain your share, right, the leadership position in terms of all of this build out as you look forward?
Nobody develops the technology more advanced than ours, at a pace higher than ours, and at a scale as large as ours. We have the largest supply chain of any computing company in history. We have a giant supply chain. And so our technology is the best. Now, that translates to the lowest cost tokens, because when your performance is 10 times, your cost is 30% higher, then your token cost is maybe 1/5. And so that advantage is the reason why people adopt our technology. Our demand, NVIDIA's demand in AWS is incredibly high. And so we're just super excited about the build out that we're doing with them. We're gonna have a very significant build out this year and the next couple of years. AWS is doing great. They're a great partner of ours. Consumption of NVIDIA through AWS is gigantic.
Brad raises a really interesting question. As these relationships are so unique in that these companies that are spending all of this money, they are customers of yours and they're competitors of yours. And they continue to make it clear that they want to be bigger competitors of yours. Andy Jassy and Brad was alluding to what he said on the call, quote, customers are starving for better price performance, and typically and understandably, the dominant early leaders aren't in a hurry to make that happen. They have other priorities. I mean, Alphabet's making its own chips too. These companies love you, they need you, but they're coming after you too.
It's okay. None of that bothers me. We're the only company in the world that takes our roadmap and all of our secrets, and we share it to our customers who are also building their own chips internally. That's how much confidence we have. The reason for that is because NVIDIA is the only platform, and software likes platforms. Software are built on platforms. If it's built on NVIDIA, it runs best on NVIDIA. There are tens of thousands of startups around the world, developers all over the world who build on NVIDIA, and so by definition, it runs best on NVIDIA. We're the only architecture that's in every cloud. We're in AWS, we're in Azure, we're in OCI, we're in GCP, we're everywhere. We're exposed to AI that is well beyond just the things that we're talking about here. Look at the stuff that we're doing in digital biology and life sciences, our big partnership with Lilly. They're building an AI supercomputer. The physical AI, we're the only company really addressing all of the world's autonomous vehicles and all the robotic systems and all the physical sciences. The world of AI goes well beyond language. It represents, probably 60% of the world's AI activity. The rest of the other 40%, that's practically all NVIDIA. And so our exposure to AI is broad. We're on every single platform. We're in the cloud. We're on the ground. We're in autonomous vehicles. I mean, we're just simply everywhere. And the key is we have so many developers. When it's built on NVIDIA, it runs best on NVIDIA.
Who do you consider to be your biggest competitor?
Well, the thing that we worry about most is just making sure that AI is effective. It has to work. The technology has great promise, some enormous breakthroughs. ChatGPT was a breakthrough. OpenAI's 0.1 was a breakthrough this last year, just recently. Claude Code is an inflection. And then now ChatGPT 5.3 Codex, another inflection. We want to make sure that AI continues to be incredibly effective. We want to make sure that protein AIs, chemical AIs, physical AIs, robotics AIs, self-driving car AIs, open model AIs, all of these different AI industries have to flourish because the world is gigantic. Remember, AI is not a technology only. It's a 5-layer cake. It's energy, it's chips, it's infrastructure, it's models, and ultimately it's applications. We need to make sure that all of the world's applications are revolutionized because of AI. When that happens, the demand will continue to grow and we would be successful in helping the world reinvent computing for the first time. And so our focus, you see my focus, all the investments that we make, all the partnership that we make, it goes across all 5 layers of the cake. It goes across all of the different domains of applications because, it's gonna take the whole planet to change the computing infrastructure for the world.
Okay, speaking of that, the whole planet, Are the Chinese competitors? They're customers. They want to be customers. You'd like them to be bigger customers than they are now. Aren't they competitors of ours?
No doubt. I think the way to think about that is that we got competitors. The United States has competitors all over the world. And if you break down AI and think about AI as a 5-layer cake, the U.S. has to win at every single layer. We have to win at the energy layer. This is an area that, quite frankly, we've got a lot of work to do, and we're going to have to work hard to make sure that we win the energy layer. The chip layer, we have to make sure that every software company in the world uses American tech stacks so that our chips are the best in the world. We have to win at the model layer. We have to win at the application layer, so on and so forth. Every single layer has a battle, and nobody can take it for granted. Every one of the layers has to go win on their own. We want to win together, but every layer has to go win.
Do you worry about, Brad, another DeepSeek moment that the Chinese, to Jensen's point, they're not sitting back idle and suggesting, okay, U.S., you win. We're playing now for second place. They're playing to win.
No, for sure. And in fact, I hear disturbing things all the time about the Chinese stack making great inroads in the Middle East and in the Southern Hemisphere, et cetera, because frankly, they're working really quickly to put their chips and their models, their open source models, DeepSeek, Kimi K2, Qwen, et cetera, and exporting those to the world. So Jensen was an important part with David Sachs, our AI czar, of putting forth an American agenda to accelerate the American AI stack around the world. We're still not going fast enough. We need to accelerate and make that go faster. You're absolutely right about that. And I think with respect to China, listen, there's a lot of fear that why would you give China any chips? Why would you? They already have chips. They already have incredible AI. The U.S. wins when the world runs on American technology, and I think we need to focus on running the fastest race we can possibly run, right? And if we do that, then just like the internet, our values will be embedded and imbued around the world in the U.S. AI stack. But make no mistake about it, I think the Chinese are out in front, and we got to up our game. We got to get faster in Washington, and we got to get out there. And thank God we have Nvidia and the leading technologies in the world in the United States, right? That just doesn't happen. Right? We create the culture and the climate for innovation and entrepreneurialism. We're sitting here in Santa Clara. AI has occurred in San Francisco, in Santa Clara, because of the great innovations we have. We got to make sure we protect that and accelerate it.
You mentioned some of the criticism that's been around. Should we sell chips to the Chinese because they want to kick our butts in AI? To that point,
China is a very large market. It makes no sense to forfeit, to concede a large market if you would like to win globally. The American chip industry should do everything we can to win all over the world, including in the Chinese market. We have to compete. It's their home turf. They got all kinds of advantages, and so we have to go compete hard. But there is no question conceding half of the world's markets make no sense if you want to win globally.
So when someone like Dario Amodei from Anthropic says it's crazy, that's his word, for the U.S. to allow companies to sell there, that they're an adversary, you wholly disagree with that?
I completely disagree with that. Of course, we would never allow Chinese military to use American technology, but that export control is well established. Of course, we would like to then go and compete in the marketplace. We want, of course, also for Anthropic and OpenAI and all of our American companies to succeed. They've got to work hard. They've got to go run fast. We make sure that we offer them the best of all of our technologies. We give them all the advantages that we can. But in the final analysis, we've got, while we're helping them succeed, we've got to go win around the world and not forfeit markets to anybody.
You mentioned OpenAI, and I got to ask you, because this has been a week, hasn't it, with the back and forth of some of the criticism that had allegedly come from the OpenAI side about you, and maybe some from you about them in a couple of reports, which you've addressed and you did the other day with my colleague, Jim Cramer. But are we really to believe that there's no there, that there's no friction between the two of you? There's really no drama between the two of you in any point?
No, there isn't. Yeah, there just isn't. The new AI models at OpenAI needs a lot more compute capability than our last generation hoppers. That is for sure. The amount of computation it needs, the model's 10 times larger, the amount of it thinks 10 times longer. And so it needs a lot more computation than our last generation, which is exactly the reason why Grace Blackwell NVLink 72 was invented. And their latest generation model, 5.3 codex, revolutionary, trained on Blackwell NVLink 72. And so they need our new generation of technology. That goes without saying. And that's the reason why NVIDIA is moving so fast. You know, every single year we're coming up with 5x, 10x more capability, and we just got to keep that pace going. Nobody else in the world could do this like we do, because as you know, these are not chips only, these are AI infrastructure, and we're revolutionizing, innovating AI infrastructure at a scale nobody's ever seen, at a pace nobody's ever seen. And all because the amount of computation necessary for AI is growing so fast. But otherwise, the rest of that stuff is just fake news.
You know, I think there was a moment, Scott, when everybody thought that there was going to be like exclusive partnerships. Like Amazon was going to be Anthropic, and, you know, Microsoft was going to be OpenAI, and Nvidia would stay in one of those lanes and pick a winner. It's too big. Everybody's going to be everywhere, right? These guys are going to, you know, have OpenAI models. They're going to have Anthropic models. They're going to have DeepSeek models running on, you know, on their chips. And I think when you look at this next round of funding, right, Nvidia and Microsoft just invested in Anthropic, right? OpenAI probably is going to get investment. There's a lot of rumors out there from, you know, from Amazon or others. Like, none of that should surprise anybody. If you want to be in the game of AI, these are the two frontier labs in America, two leading labs. Put X.AI in there as well. It's going to be fascinating what they do with Starlink and data centers in space. And you're also
I'm a big investor.
You're also a big investor and partners there. So I think you should expect that as the new normal. And, you know, like, we like to make a lot out of these things because, of course, they're competing. Everybody's competing to make sure they're the lead in those investments. But I think here's the thing that I think it tells you. Everybody had this idea the last couple months, OpenAI's dead and Anthropic to the moon, right? OpenAI just launched another incredible model yesterday with Codex. They're going to raise a lot of money. I can tell you there's a lot of money that wants to invest, strategic money, financial money, et cetera. And the good news for your viewers is both these companies are going to be public over the course of the next 12 to 18 months, and retail investors are going to get to participate.
All right, this is
Could you imagine being large early investors in Google, Amazon, and Meta?
Incredible.
Insane. Incredible. And that's what we're looking at.
That's a perfect place to leave it. As we said, in your backyard here in Santa Clara, I can't thank you enough for spending time with us. Jensen, thanks so much.
Thank you very much.
Pleasure. And Brett. All right, guys, thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Santa Clara, site of Super Bowl 60. And speaking of big round numbers, the Dow hitting 50,000 for the very first time ever. We're going to track it over this final stretch. Can we close above there as well? Well, we shall see, which means you can't go anywhere. We're also going to speak live to the CEO of Levi's, the company's brand taking center stage this weekend. We look very much forward to that. And the mayor of San Francisco, Daniel Lurie, he'll join me, his city in the spotlight over the next few days. Lots to discuss. We, of course, though, we begin with the markets as stocks are surging back today. How about the equal weight S&P 500, also hitting a new record high today? And that's a very, very big part of this market story. So's Amazon. It's lower. Its AI spending plans, well, they blew past expectations. And that's where we begin today. History on Wall Street. The Dow hitting 50,000 for the very first time ever. Let's bring in our panel, the Wharton School Professor of Finance, Wisdom Tree Chief Economist Jeremy Siegel, CNBC contributors Hightower Stephanie Link, and Requisite Capital's Bryn Talkington. So good to have everybody with us. Professor, I'm going to you first on this. 50K for the first time ever.
I mean, we set this up about 3 weeks ago, and who would have dreamed that this is 50K? I mean, I remember 10K in 1999, and, you know, it was 25K in 2008. So, you know, I mean, 2018. So in 8 years, we've actually doubled the Dow. And as you know, the Dow is underweight technology. So it's more of the value stocks, more of the older stocks. It does have a couple, certainly, tech stocks in it. But for that to hit a new high like this, I mean, it shows despite what we see, this rotation, there's a lot of fundamental strength in this economy.
Yeah, Steph, it shows the durability of the story, the bullish backdrop, and the narrative that has allowed the market to get to this level, in some respects without technology taking it there. I mentioned in the intro the equal weight S&P hitting a record high in its own right, and that part of this story needs to be focused on heavily.
Oh, 100%. And I think the reason you are seeing the equal weight doing better is because you are seeing the broadening out, and that is tied directly to the economy growing 4 to 5%. And we haven't even had the impacts from the one big beautiful bill yet, but we know we're getting fiscal, monetary policy, accommodation likely. We have deregulation. We may or may not get housing. That would be icing on the cake. But I think the reason the markets are rallying substantially today and have been so resilient is because we are seeing that CapEx spend from the hyperscalers. And I'm sure we're going to get into all of that in a bit. But they're going to spend, the big seven are going to spend $700 billion, up 75% year over year, up from the $450 billion they spent last year. That is a tailwind for the economy, 100%. And because we've talked about the food chain, all of the various different industries that are going to benefit, the power companies, data center, grid, the financials, and the consumer. So I think this really feels good, and I'm so glad that we're finally seeing a broadening out. And that's, by the way, tying back to very good earnings as well.
What a difference a couple of days makes, too, Bryn. You know, the last couple of days obviously have been dominated by questions over all of this AI spending and whether all the angst over it is justified or not. I asked that question to Nvidia CEO Jensen Huang, who joined me earlier right here. Listen.
Demand is sky high, and there's a fundamental reason for that. We're in the once-in-a-generation infrastructure build-out. This is the largest infrastructure build-out in human history, and there's a fundamental reason for that. Artificial intelligence is going to fundamentally change how we compute everything. Everything from database processing, the way we do search, the way we do recommender systems, the way you shop, the way you watch movies.
So, Bryn, what do you make of that commentary? I mean, it certainly helps soothe, I think, all of the concerns that are out there about these tremendously large numbers that we keep hearing.
Right, and I think part of those tremendously large numbers are why we see the Dow doing well, why RSP is breaking out, because we have so much spend into the economy. And so, GDP is picking up. And so when the OBBB actually gets put in, we feel that this is part of why you're getting that broadening, because, these data centers, the grids, those are workers, electricians, those are components that are actually being built out largely in the U.S. And so I think you're going to continue to see this broadening out. We added the equal weight RSP in January of 2024, expecting a broadening out. So 2 years early, but nice to see that happening. And I think you're going to continue to see that. But I do think you're going to see individual names in tech. I mean, Apple's done very well, and they're clearly the one company that doesn't have the CapEx, but has the high free cash flow.
Professor, Jensen Huang makes it clear that there's just too much angst and anxiety over these big numbers, that it's so justified because demand is so large and the transformation so big that it's going to take this level of spending from these hyperscalers to get us to where we need to go. I feel like at times the market just has a hard time accepting it because the numbers are so big.
Yeah, I mean, and one thing he said that struck me, that demand for his older chips, 4, 5, 6 years, the prices are going up. And, when you think about the history of technology, older technology never goes up in price. The demand is sky high. I was just floored by that. But I fully agree with him. This is probably one of the greatest technological revolutions that we've ever experienced. It's going to change the world in many ways that we don't know, but it's going to be for the better because we can produce more and do more with less effort, which is basically what technological progress and science and progress is all about. So I mean, I'm very excited by what he said. Of course, being ahead of Nvidia, that would be what he would think about. I think the doubts are, is it going so fast that we're going to see a breakthrough that could devalue some of the technology that is developed, like we did in 2000 with the fiber optics, the multiplexing, which really was able to put so many more signals through a fiber that all the Nortel systems, JDS Uniphase, all those companies suddenly collapsed. Is there going to be some sort of surprise there, good for the consumer, but bad for some of these companies? I think that is what is keeping some of the people on edge. But as long the demand is astronomical.
Yeah, we were just showing a board of the mega cap names, and of course they're still mixed because there are questions individually about some of these companies. I want to take a look at shares of Meta as well as we head through this final stretch. There's the mixed picture that I was talking about. Meta's been red for much of the day, but you'll see if you throw up an intraday chart here and you track the point of our conversation with Jensen Huang when he said something specific about Meta. I want you to listen to this.
Nobody uses AI better than Meta. And so if you look at the way that they're using AI, AI went from a classical recommender system running on CPUs to now a generative AI agentic system that's making recommendations. Everything from the way social media works and the way they recommend ads and help advertisers create content has fundamentally been changed. And their earnings show it. And that's the reason why they're investing so hard.
All right, Steph, you're the Meta shareholder. Those comments obviously got our attention, and though the stock is red, you could see a bit of a move off the worst levels of the morning when Jensen Huang sang the praises of Meta and what they're doing in this area.
Well, we talk a lot about monetization, and some people are very frustrated that some of the hyperscalers are not seeing it, some of the software companies aren't seeing it, et cetera. These guys are. Meta is seeing monetization. They just grew revenues 23%, but they raised revenues by $3 billion more than what people were expecting. So they're going to go from something like 23% to something like 30% because of all of the usage and the spend on AI. And of course, the family of apps grew 24%. Impressions grew 14%. Price per ad, that is monetization's definition, and that was up 6%. It's been comfortably in the upper single digits in terms of pricing power. That's great to see. I think the stock trading at 21, 22 times forward estimates for this kind of growth is a buy. You know I own it, and it's one of my biggest positions, and I'll continue to buy it because I do think over time the estimates are going higher. Now, I know the one concern is that free cash flow is coming down. It's only going to be $9 billion this year after all the spend. And that is something to watch because I'm not crazy about negative free cash flow, which is why I think Amazon is down today, why Oracle is down 60% from its highs. But I think that over time, this spend is going to lead to stronger results and stronger free cash flow. So I'm willing to give them the benefit of the doubt.
So let me come back to you on that, because that's the point that Jensen made when he was sitting right here, that if you're simply focused on the spend, you're missing the other part of the story. You can't say they're spending such a significant part of their free cash flow without realizing that most believe, he clearly does, the CEOs who are making the spend clearly do, that if you continue to ramp that up, you're going to get higher free cash flow. You just got to wait for it, but it's going to happen.
Yeah. 100%. I have no doubt. That's why I'm willing to give them the benefit of the doubt. I really don't want them going into the debt markets in a big way, Scott. That would kind of get me a little bit more, not cautious, but just not something I want to see. But if they continue to deliver these kinds of numbers and estimates, and they keep revising estimates higher in the face of this spend, just imagine when they can see a leveling off of the spend, what the operating leverage could be for this company. You're going to have this 25 to 30% growth on the top line. You're going to get margin expansion, then you get operating leverage, and that really will take the stock really take off from there. But we have to wait a little bit for now, and I'm willing to do that.
Yeah, clearly. Professor, we were struck, just like you, on the comment that Jensen Huang made about what all of that demand is doing to the price of Nvidia chips, even the older ones. Listen to this.
In fact, GPUs that we sold 6 years ago, the prices are going up. It's not like it's antique. I mean, it's incredible. It's like a fine wine. The demand is so high that GPUs I sold 6 years ago are going up in price. And so I think the demand is just incredibly high.
As our Nvidia shareholder.
Yeah, I think what's so amazing is we're all listening from Jensen, Christina, et cetera. Their earnings don't come out till the end of this month. We're looking for 65% revenue and 70% earnings growth, but the stock can't get above 200. And so if you look at all of the big Mag 7, NVIDIA is by far the cheapest. You look at price to sales, margins, revenue, earnings growth, but there is such skepticism because it can't get over 200. And I think that we're in this moment where, people are saying, well, this is already priced in, but I think it's not. And ultimately, I do believe it will break above that 200 because when you're consistently getting these massive revenue and earnings growth and these hyperscalers are going to spend, NVIDIA continues to be, one of the core companies that should be in portfolios to capitalize on this historic spend that we're seeing with the hyperscalers.
Professor, I'll give you the last word, excuse me, in our panel conversation. Again, as we're focused so heavily on Dow 50K, and we've been so fixated on everything going on in tech, I know there's a lot of belief that this is just a blip, what's been happening in the market, and sooner rather than later, money's going to start flowing back to these names. Do you believe that too?
I certainly do, but we can't underestimate, as you pointed out, the equal-weighted S&P surging. What is so remarkable is that almost 80% of the firms say they're in the very early stages of implementing AI to improve their own productivity, which means improving their own margin, which means profits, earnings, and increased prices. And I think the market is sensing that. While all the providers and producers and the Mag 7 are in advanced stages of producing it, doesn't mean they can't keep on rolling. The very early stages are those companies that have not used AI fully. And all the surveys say there's a long way to go there. And that's why I think this broadening out is just the beginning.
All right, we're going to make that the last word. Thanks, everybody. Professor, we'll talk to you soon. And Brennan, Steph, I know we will as well. All right, it's been an ugly week, a no good, very bad week for crypto. Bitcoin is bouncing a bit today, but it is very much in focus, especially for Mackenzie Sigalos, who covers that for us. Hi, Mac.
Hey, Scott. So Bitcoin trading back at that $70,000 level, up about 17% from the overnight low. But this is still a damage control market, with the rest of the complex still far off their highs. Ether, XRP, and Solana are down as much as 70% from their recent peaks. And you can see how tied this is to the Treasury trade strategy, 24% higher going into the close, even after a brutal quarter. It posted a $12.4 billion Q4 net loss on an unrealized hit to its digital asset holdings. The company needs Bitcoin to add another 6K just to get back to break even on its position. And on institutional flows, around 40% of spot Bitcoin ETF holders are underwater. We have seen roughly $1.3 billion in net outflows in the last 3 days. Meanwhile, the bear case is getting louder. Michael Burry is warning that this kind of drop could trigger a death spiral among corporate holders. It echoes what Jim Chanos has argued for a while now, that packaging non-earning exposure with leverage can end badly when the unwind starts, Scott.
Yeah, Mac, thank you very much for that in-depth look for us, too. Let's bring in CNBC contributor, FundStrat's Tom Lee, who's so timely to speak with, not only for Dow 50K and the jump back in tech, but also as the chairman of BitMine. Tom, I know you're watching what's taking place in crypto. We're talking about a 7-month low for the stock of BitMine. The Ethereum paper losses, $8 billion. Is this in jeopardy of going into a pretty dark place?
Hi, Scott. Thanks for having me. BitMine is designed to be a vehicle that tracks Ethereum prices, but on the upswing, because we're adding Ethereum, will outperform. So Ethereum's in a drawdown. BitMine's going to be in this drawdown spot. BitMine has no leverage. It has roughly 4.3 million Ethereum that earns 3% annually, and we have 600 million cash earning about 4% in money markets. So the company is making about $1 million a day. So there is no risk, no need for the company to actually raise money because it's debt-free and actually generates about $360 million a year in net income. I think crypto sentiment is rock bottom because it has been a terrible drawdown. I mean, just the past 10 days, Ethereum's down 40%. And that's triggered, I think, a lot of concerns about whether crypto is even viable. But, you know, all of those statements that I just heard from just a minute ago, I heard the same thing in November 2022 after FTX. And that's the reality, that crypto is sort of characterized by hypervolatility and big drawdowns. I mean, just in the last 8 years, Ethereum's had 7 drawdowns of 60% or more. The good news is 7 of those were all V-shaped recoveries. So we had a waterfall decline. If crypto's bottoming now, which it kind of looks like it is, especially given MicroStrategy's 25% move, the recoveries are V-shaped. So we recover as quickly as we've fallen.
Just want to follow up on that. Where you suggest there's no risk to the company, is that assumption that Ethereum has stopped going down, that this is a bottom? If there is what some have predicted to be a coming quote-unquote death spiral for certain cryptocurrencies, if the situation with Ethereum gets worse, what happens here?
Well, yeah, I mean, it's a fair question. I think we can look at metrics, for instance. If you look at the number of active addresses on Ethereum, it's up 117% versus a year ago. In fact, in just the last 3 months, that's actually gone up parabolically. As you know, coming out of Davos, what was the big story around what Wall Street plans to do? It's tokenization, which is moving a lot of their financial infrastructure onto the blockchain, Scott. That's not going to change just because crypto prices have fallen. But what is the blockchain that is evident, listed, named by whether it's UBS, Standard Chartered, or Fidelity, where they're tokenizing products? It's on Ethereum. So Ethereum is not in a death spiral because the utility is going up. The price, of course, has been awful. Unfortunately, crypto prices are volatile. It's not like earnings estimates change for Ethereum. In fact, network usage is up 80% in just the last 6 months. But it does mean prices move a lot. I mean, it's sort of a feature of crypto itself.
Tom, we'll talk to you soon. I appreciate you joining us. It's a very big day in the markets, and this has many investors focus on what's happening in crypto.
Hello, welcome to Blue Cloud Trading. I'm George. It is Friday. It is 5:22 p.m. Eastern Time. Market is closed. A really good day today in the markets. It surged. The Dow went over 50,000. It actually closed at 50,115 today. It was up 2.47%. You can see what happened here. Price gapped up in the morning and then just kept on moving. NASDAQ, same thing, up 2.18% for the NASDAQ. S&P 500 was up 1.97%. And look at the Russell, up 3.59%. That's huge. Now, we just saw some clips from the halftime report earlier today and closing bell. And what I'm going to do in this video, folks, is cover, not all of them, but the majority of the stocks and ETFs they discussed. We're going to look at the S&P 500, the Dow, the Russell, the Euro stocks, which actually they did not discuss, but I feel it's important that we talk about that. The QQQ ETF, the VIX. We're going to look at the Mag 7 stocks like Apple, Meta, Microsoft, Netflix, Tesla. So not all of them. We are going to take a look at this, a list of 20 stocks and ETFs all in here. And then we'll also take a look at one of our members' requests, QLD. So there's a lot to cover, and I'm not going to spend too much time on each one individually. But the beautiful thing is we're using something called the Ichimoku indicator. I'm going to give you guys a quick synopsis of that in a second. But before I do, let's take a quick look at the heat map. I just want to show you guys how the market looked today. I mean, crazy, right? Look at this. The technology stocks were up quite a bit. The semiconductors did well. The financials did well. The healthcare stocks did well. But look, Google and Meta were down. So was Amazon. Tesla was up 3.5%. The consumer defensives did well. Industrials, real estate, utilities were kind of mixed. Basic materials and energy were also strong today. And let's take a look at the themes. I like this new themes segment here, and you can see pretty much everything was up. What was not up? I guess under social media networks were down 0.99%. You can see how Google and Reddit was down 7.43%. Let's see what else. The telemedicine was down. Docs down 16.78. Under healthcare and biotech, there it is again. Let's see, aging population and longevity. Okay, some of the stocks there. Anyway, the majority did pretty well. I mean, pretty much every sector was up today, which is nice to see. And all right, so let's do this. Let's go ahead and I'm going to give you guys a quick little synopsis of this indicator, this very, very cool indicator that I use. It's called the Ichimoku indicator. It's a Japanese indicator. And what it does is it helps us to identify the trend, essentially, of the markets. It could be an ETF, it could be a stock, it could be a currency. It doesn't really matter. But what it does essentially is it tells us how strong is that trend, and what we're looking for is a cloud, the Ichimoku cloud, right? Which is what you see right here: the Senko span A, the Senko span B, and you've got the Tenkan-sen, the Kijun-sen, and the Chiku span. Those are the 5 lines that create this indicator. Just quickly, I'll just let you know what each is. You've got the conversion line or Tenkan-sen, which is the midpoint to the last 9 periods. That's the green line. You've got the baseline or the Kijun-sen. That's the midpoint to the last 26 periods. You've got the Chiku span. That is the current price projected 26 periods into the past. We want to see that white line above the candle 26 periods ago. We also want to see price above both of these two moving averages, and we always want to see the green line above the red line. The faster moving average should be above the slower one. Then you've got the cloud itself. Now, how did they come up with this? And why is it out here into the future? Well, they basically took the midpoint of these two moving averages here, the Tenkan-sen and the Kijun-sen, and what they did was project it out 26 periods into the future. So as each week goes by, we're looking at a weekly chart. This will also move, and it will always be based on these two moving averages, and it's always going to take the midpoint, and that's how that first line is created. The Senko span B, basically what they did with this one is they took the midpoint of the last 52 periods. Instead of plotting it, under the candle or above the candle, they projected it out 26 periods into the future, but creating the Senko span B, and that's how the cloud is comprised. Then they fill it up, and it's very easy. Now, the idea here, Ichimoku stands for at a glance. We want to quickly assess when we're looking at a stock. As I skip through these, you'll see how valuable this visual is here, because your eyes are going to be able to quickly recognize whether or not it makes sense to consider the stock or maybe discard it, maybe not consider adding a position quite yet, and double, you know, double check your stocks if you're using this indicator. You want to check to see where your stock lies in relation to the technicals here. Now, I've also thrown one more indicator. It's called the directional movement index, and this is more of a secondary confirmation type indicator that you can also use. Now, let me just switch it to the daily for a moment so I can show you what's going on here. So ideally, and we don't have that, by the way, on the S&P 500, but ideally what you're looking for is that green line there, which is the positive DI9, to be above. That green line should be above the red line, which is the negative DI9. We don't have that here, and that's mainly because, as you can see here, price in the S&P 500 was dropping quite a bit this couple of weeks now. Now, we did have this one big day today, but it's not going to change that indicator that quickly. The good news is the red line is moving down, the green line is moving up, and when they converge and the green line pops back above, like it did back here, for example, you go straight up, it does tend to lead to a move back up in the stock. Same thing over here. Okay. And sometimes it's short-lived, sometimes it's a longer extended situation. So yeah, this is another great thing. Now, there's one more line here. It's the ADX. If when that white line is moving up, that means the momentum is increasing. It's very agnostic. It doesn't really care what, what lines are, if the red line, for example, is above the green line and that's moving up, what that means essentially is that the momentum is increasing to the downside. And that's what was happening here. Once that momentum starts to drop, okay, that means that the selling has stopped. As you can see here, it found support at the cloud here. Multiple times, whenever price comes down to the cloud, it is a very strong level of support, as you can see there. Anyway, so let's go ahead now that we have the basic rules here of both of these indicators. We can quickly, I'll give you guys my take on the stocks that they talked about. So S&P 500 looks good on the daily chart. It is back above the cloud on the weekly chart. It's also above the Tenkan and Kijun. Okay, so we've got both of the time frames, the weekly and daily, giving us a confirmation that this is still a strong uptrend. So it gets a blue flag. So if you see a stock or ETF here that has a blue flag on the left, that means that it qualifies for something that I personally would consider adding to my portfolio. Okay, because it's technically sound. Now, one other thing, even if this again the directional movement index, I don't really pay as much attention to. It's important to look at this because it kind of gives us some insight as well. If you look at this on the weekly chart, for example, see how it's been crisscrossing a lot. What that essentially means that there's been a lot of consolidation here. Price has been stuck. You see that box there? So unlike the Dow Jones, which we're going to take a look at, the S&P 500 is still kind of flat. There's not a whole lot happening here in the S&P. Let's look at the Dow. Ooh, interesting, right? So look what happened today. This was huge. It was up 2.48%. Look at how long price was stuck in this little tight range. And as I mentioned yesterday, what we're waiting for, essentially was a break above that level. And I said we're getting closer and closer. Look at this. This is also giving us confirmation, right? The green line is above the red line and it's moving up. That's what we want to see. What else do we have as confirmation? The ADX, right? That's also moving up. Now I've got this set at a setting of 9. It's different than what you would find on the standard indicator. It's a little faster, but I found it to be a lot more useful. What else do we have for confirmation that this is a true move to the upside for the Dow? It's the volume today. So as price, let me just show you some support levels and resistance levels. As it broke through that $496.34 level there from that high, okay, we had high volume as well. This is significant. So going into next week, the Dow is still the strongest. And I've mentioned this, by the way, all week. The Dow has been looking, the strongest and most bullish of all the indices. Let's look at the Russell, though. The Russell 2000, I mean, it had a big jump, up 3.59% today, which is huge. The IWM ETF is one way that you can invest in the Russell 2000. And it also broke through this like support level. You can see how price was pulling back here. Price actually closed yesterday under the Kijun. Things were looking kind of negative, very negative actually for the Russell. And then of course we have a big gap up right there. So and by the way, if we switch it over to a 5-minute chart, let's take a look at that 5-minute chart. Here we are on the 6th of February. Okay, so this red line that you see here, the dotted red line, that was yesterday's close. So on the 5-minute chart, we were under the cloud. We were okay. And then pre-market and after hours, you can see that huge jump that took place. So you probably woke up this morning like, whoa, the market's up quite a bit. And pre-market, things were looking a lot more bullish. And the sentiment has changed essentially. And so there's that dotted green line is the opening price. So that's a big jump. In fact, it just boop, popped right above that cloud, popped above the 200-day. That's the dotted yellow line that you see right there. And it just continued to move up throughout the whole day, right? It just kept on moving. So I like the Russell. And here's the weekly chart, also looking pretty good. But again, on the weekly chart, we're still kind of stuck in this consolidation area. All right. And let me look at the Dow one more time. Yeah, the Dow is a lot more bullish still. So it broke through that consolidation. FEZ, the Euro stocks, here it is on the weekly chart. Holding up above the Tenkan Kijinsen. We have a bullish cloud. The Chiku span is above price. Everything looks pretty good here on the weekly chart, but the daily, you know, it also basically popped. It was dropping, 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 and then popped. I like the FEZ quite a bit as well because, again, if you look at this weekly chart, we haven't really stopped with the European stocks. They've just been continuously moving straight up. They haven't even been consolidating really. If you think about it, maybe there's a little bit of consolidation right there for a short period of time. Actually, let's switch it to the weekly so you can see what I'm talking about. So it's been just moving up, 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 and we're above that $66 level, which is a monthly level. And again, I've talked about how that. I mean, you have to go back in time quite a bit to find that prior high back to 2007. Right? That's when we were at that level last. And so the fact that we're breaking those levels, that's important. The QQQ ETF, here it is in the monthly chart. It's been moving sideways for multiple months now, 5 months. It's at a consolidation. Here's the weekly chart. All right. You can see it's basically nothing really truly happening here. How about in fact, on the weekly chart, it actually kind of still looks weak. The QQQ, just because we had a big jump today, that does not mean that this is the end of whatever is happening here with this consolidation in the Qs. In fact, let's look at this a little deeper. Do you see what's happening down here? The red line is still moving up, the green line is still moving down, and the ADX is still moving up. The volume increased this week prior, again, we're looking at a weekly chart, and it increased and it closed under the Tenkan. It hasn't even broken back above here yet. If we switch it to the daily chart, right, there's the damage that happened. It actually got under the cloud. And, today was a big day, but did it really break, convincingly above the cloud? It did not. Okay. It's still under these moving averages on the daily chart. So I'm a little concerned, to be honest with you. The last time that we were at 637.01, okay, was right here, back on January 28th. And the time before that was over here, okay, October 29th of 2025. So this does not look like a particularly strong chart, obviously. I'd stay out of the Qs for the time being, folks. Be careful of the technology stocks. Here's the VIX. So the VIX yesterday, it had popped and closed above the cloud. And this represents volatility and fear in the markets because there was a lot of fear in the markets, right? And everything has been diffused today, down 18.42%. Look at this. It just basically gapped down and then continued to drop, drop, drop and closed under the cloud. But it's also right above that 200-day moving average. So, just keep that in mind. All right, so let's keep going. Let's look at Apple. Notice how there are no flags here, no blue flags. That's because there's something off technically with every single one of these stocks, and I wouldn't consider adding it quite yet. But we can look at the weekly chart, and the weekly chart on Apple actually does look quite strong because you've got a bullish cloud, right? You've got single span above the single span B. You've got price above the moving averages here. In fact, today, this week was a big week for Apple, but the daily chart, we still have a bearish cloud, okay, right there. And it's just emerging above the cloud now for 3 days. And we do have a positive crossover. So the cloud itself is still bearish. Now, you might want to take that gamble. But personally, I like to wait to make sure that all the elements of the indicator are bullish before I consider a trade. So there's Apple for you. Here's Meta. It's inside the cloud. Again, if price is inside the cloud or under the cloud, you should skip it, in my opinion, because there's something technically wrong with the company. It was down 1.31% today, where all other technology stocks were doing well. Meta was a loser, basically. So stay out of that one for now. And notice one more thing, guys. If you look down below here, the negative DI line crossed above the positive DI line. Okay. And if we look at the weekly chart, we're inside the cloud and we're under the Kijinsen. So yeah, it's nothing positive that I'm seeing here yet for Meta. Microsoft continuing to drop. Yeah, it had one day where it's up 1.9%, and it created a bullish little pattern. They call this the bullish harami. When you have a large red candle followed by a small little bullish candle. I'll just show you guys that on this little cheat sheet that I have. Here it is. So take a look. If we look under the bullish column here, we're going to go under the double candle patterns. And we're going to look at this right here, this pattern right here. It's, again, the large red candle followed by the small bullish candle. Harami stands for pregnant. So it's easy to identify. You're looking for, again, a large red candle followed by a small little bullish candle. If you see this after a pullback, after price has been dropping, that's bullish, okay? And we are essentially seeing it in that respect. That's not enough, however, in my opinion, for this thing for us to really truly feel confident that this is the end of the pullback, for Microsoft. Okay, I mean, look, it's had a few other opportunities. Here's a bullish Harami right there, and look, it moved up and stalled at the cloud, and then gapped down back under the moving averages. It's still in a weak state. The momentum is still increasing to the downside. See that ADX still moving up, so stay out of that one. Netflix. Okay, so Netflix up 1.64%. Okay, look at it. Look at the big picture. It's in a decline. Look how long it's been under the cloud, and it's still under this 82.11 level. It was, I take that back. It did close above it, just barely at 82.20. Let's look at that on a 5-minute chart. Okay, there it is. So these are 5-minute chart candles. It barely closed above it, but look at that wick at the top. You know what that represents is selling. So the last minutes, it did start dropping again. That's not enough information, or enough, you know, data for me to feel confident that this thing is going to turn around here for sure. So Tesla also, it was up 3.5%, but it stalled right at the 9 period. It's under the cloud. I'd skip that one too. Look at the negative DI. It's above the positive DI. Chiku span is underpriced. We've got a bearish cloud. It doesn't, you don't really need to spend too much time on these. Just skip them altogether. Adobe, under the cloud, still in decline. No. Looking at daily charts now. Apple Oven. Okay, it had a nice little pop up over here. This is the 3 candle type pattern. I'll show you guys what that looks like. And it is a bullish pattern. Um, let's see, where is it? It kind of looks like the morning doji star. Do you see this right here? Right, so it's declining and you have a little reversal type candle. It's not going to be exactly the same, but it's almost like that. And we have a bullish little candle here. It was up 8.39%. But when you look again, look at the overall picture here. This is not, it's very difficult to predict that this is the end of the pullback. All right. It actually might move up I wouldn't be shocked to see this thing move up a little bit and then it will find resistance at the green line, the 9 period, and probably continue to the downside. It certainly could break through it, but I'm just saying, just think of that as your target. If you're considering buying Apple Oven, that's still a 12.8% move just to reach the green line, the next level of resistance. Okay. All right. BMNR. This is Tom Lee's. He's basically the appointed chairman of Bitmine Immersion Technologies, which is basically tied to Ethereum. So if Ethereum is moving up, so is BMNR pretty much. He tried to make some distinctions there between the two. The BMNR is not going to get as hit as much as ETH. Let's look at ETH, for example. It was up 10.27%. That's the Ethereum ETF. And BMNR was up 17.64%. So you can see there is a little bit of a difference there, but they're both tied to each other. Bottom line is I would stay out of that for now. Obviously, it's in a very, very embedded decline still. CRM, Salesforce still under this monthly level of 193.68 under the cloud. No on that one. DHI is above the cloud on the daily chart, but we have a negative crossover. I don't know if you can see it. Single span A just crossed under the single span B. That's negative. Let's look at the weekly chart too. Still under the Kijinsen. The faster moving average is under the slower one. Yeah, it's not something I would be interested in. FTAI, this was Steve Weiss's final trade on multiple occasions in the past, and he talked about it a little bit today. On the weekly chart, it's in this basically strong uptrend. It seems to be pulling back slightly. On the daily chart, So these last few weeks has pulled back. It temporarily got back above that 9 period, but then it drew back. So it was up 5.21%. This is pretty close to a buy signal, honestly. If it can break through this little trend line here, you see that? That's not a bad looking pattern. I'll show you what that looks like. Let's look at the so right below this, I have the stock patterns cheat sheet. So it looks like it essentially looks like a continuation bullish variant flag. Okay, do you see this right here? So it moves up. You'll see it creating smaller, lower highs, lower lows, but they're very, very tight right there like that, and it creates like this almost like a flag-looking type pattern. And if it breaks through that level there, then you should expect it to move up. Now, this is the bearish version. If it's been declining, and then you see a small little uptick here where it creates a little higher high and higher low, but it's very, very, again, a tight movement. If it drops under, that's bearish. So, by the way, if you guys like this pattern, you can get this as well as the cheat sheet that I use here, the candle pattern reference sheet on my Twitter page, x.com. Go to x.com and find me under @BlueCloudTrader. Once you're on this page, scroll down, you'll see posts, replies, click on highlights, and scroll down a little bit, and there it is. Okay, it's the third tab in. All right, now let's get back. So, yeah, it has some potential, but it's not a buy signal yet. What about gold? They talked about gold briefly. Yeah, it got beat up a little bit, since Thursday, January 29th. Remember that big drop? And it continued. And now it's starting to recover a little bit, but it has not really cleared above that 9 period yet. It was up 3.07%. So I'm still a little suspicious about gold. Here's the weekly chart. The weekly chart looks good, but the daily chart is still weak, in my opinion. All right. It's been kind of like moving sideways here. What about Bitcoin, IBIT ETF? It was up 9.92%, but it too does not look particularly strong here. It's been in a huge decline for so long. And this might be the area where it recovers, but I'm not going to take that chance. I don't know. IGV Software Index Fund, that's also declining. Today was up 3.5%. You know, look, what will most likely happen is it will certainly probably move up next week. I wouldn't be shocked Monday and Tuesday, maybe even Wednesday. Come right back up to that Tengensen, just like it did back here, and probably drop again. But how far are we from that level? We're about a 7% move. Okay, so expect that potentially. And again, that might be the end. But we won't know until we can see it on the charts. And so I'd stay out of that. Intuit, similar situation here. I'd stay out of that one. KBH, this one moved above the cloud and now it's re-entering the cloud. We have a bearish cloud. Stay out of KB Home. LEN, Lennar Corporation is under the cloud, closed under it. It's under the 200. No on that one. Eli Lilly is it just popped above the cloud, but it's under the Kijinsen. Chico Spin is underpriced, so I'd stay out of that too. Right. MSTR, MicroStrategy. Now it's called Strategy Inc. It popped. Now, you know what's kind of cool about this one? All right. I was like checking this out earlier. See that $101 level? Where does that come from? Well, interestingly enough, it was go back. Let's go back in time a little bit. In fact, let me switch it to a weekly chart. So whenever I color a level blue, that typically represents a weekly support level or resistance level. It's an easier way to identify based on the time frame. Now look at this, guys. Do you see these two levels here? These two candles, this one right here and this one. So price came down to that level and bounced. You can see here, it came right back down to that level and bounced. I actually created this support level. If you look at the little box when I hover over it, it says created September 10th of 2024. Okay. So this right here was August 9th, 2024, right here. Isn't that crazy? So the very next, couple months later, like I basically drew this and I said, oh, okay, we need to we're basically above this nice support level. Here we are. Okay, February 6th, 2026, and we're back there. We're back at that same level. Now, what's a natural reaction is for price to basically, once it touches that level or comes really close to it, is to bounce because it's a stronger level. If you have a weekly support level, expect price to stall. Doesn't necessarily mean it's always going to bounce. It doesn't always necessarily mean that that's the bottom, right? But there's a higher likelihood now that this particular stock will actually move up. So we will see if I'm correct about that. But it was up 26.11%. That's a pretty big move. There are these levels are important because every time price reached that level in the past, right, there were buyers that stepped in to help push it back up. The question is, are those buyers still there, ready that we're talking about big whales now? Are they ready to put more money into this? And they certainly moved it up quite a bit. That again, this is a weekly candle that you're seeing here. That's a bullish candle. It's almost like a hammer type candle. So if you see something like that after a pullback, and it's got a long wick. Again, let me show you the cheat sheet. Let's go to that again. I'll just show you guys real quick. It's a single candle pattern, which is bullish. And so here it is. Do you see that? So price has been pulling back. There's a tiny little body at the top, and there's the wick, the long wick at the bottom. That's called a hammer. The same exact candle, if it happens at the top of a move after price has moved up, instead of it being called a hammer, it's called a hanging man. So again, the little head, and there's the body. So in this case, this is bullish because it has pulled back. All right. As you can see, after that long pullback, that's a pretty long wick, a lot of volume. The directional movement index is not telling us anything here. I mean, it's still negative. Okay. It's certainly still negative. And it did stall right at that 200-day, right? And it did not break above Tenkinson. So we'll see how this thing plays out. But it is interesting. We should certainly watch that level, is what I'm suggesting. How about Oracle? And by the way, it doesn't necessarily have to be a support level that I draw. You can look at moving averages, and this particular one, the 200-day moving average, is obviously a very significant one. It stopped right there. Oracle might actually bounce here. It was up 4.65%, but it's under the cloud right now. The Chiku span is under price. Here it is in the daily chart, right? It's had a big decline, and this is a good company. It's got profit margins of 25.2%. Um, I think it was beaten down without really just cause, but it is down nonetheless. And so we have to accept the reality that sometimes stocks are going to decline, and it might defy logic and reason, and yet the stock still declines. Okay, and so we have to, in those cases, manage the trade as best we can, and recognize that, hey, you know what? You got to start trusting the charts a little bit more. But the good news is, at least for today, it was up 4.65%. And, this is a bullish harami. We talked about that earlier. The large red candle followed by the small little bullish candle, the pregnant looking type pattern. Okay. PANW, Palo Alto, that also looks good. We got a hammer after that pullback, but it's under the cloud, so no. PHM, this one here looks okay on the daily chart because it's above the moving averages in the cloud. But if you look at the weekly chart, faster moving averages into the slow one here. So it didn't quite qualify, but it's pretty close. PHM is not a terrible looking stock. All right. So I would keep an eye on that one. Palantir, PLTR. I'm sorry. Yeah, Palantir Technologies. In the technology sector, volume is increasing to the downside here this week. It's inside the cloud. This is not particularly strong. It was up today, 4.53. So let's look at that daily chart. Here it is in the daily chart. So again, don't get too overly excited over one day's candles. Here's an instance where we had a bullish candle. Here's another instance where we had a bullish candle. How did that work out? If it does move up the rest of this week, this coming week, it's going to come up to that 148.21 level based on that prior low there, or I'm sorry, that low, or around that area, basically. And that is currently around 8.8% away. And then maybe it will stall and continue to the downside, potentially. ELTU, Here we have another bullish harami, but it's under the cloud, so not interested in Palantir Bull 2X shares. SLV up 5.25%, but it's been broken, in my opinion. Silver is broken. That bearish, they call that the bearish engulfing pattern right there on silver. That's a weekly. When you see a negative pattern like this on a weekly chart, it's so much more significant than when you see it on a daily, right? Because there are a lot more people that are, watching they're looking at the longer charts too, right? So they're looking, trying to get guidance from these higher time frames. And this is not a good, this is what happened last week, right? The week ending Friday, January 30th. Okay. And this is what it looks like this week. Again, looking at that daily chart, it might bounce here, but I'm not jumping in for joy. I'm not particularly excited about it. And then finally, let's look at one more. So we just went through all those stocks. QLD, one of our members. Here's the weekly chart. It's holding up on the Kijinsen. But as I mentioned earlier, the Qs aren't looking particularly strong. And if you look at this directional movement index, look at the ADX moving up, negative DI moving up, positive DI, higher volume. I would not be adding this position, even though it's up 4.16%. Here it is in the daily chart. Okay, it's under the cloud, right? So I'd stay out of this one. Folks, if you'd like to learn a little bit more about trading and maybe even check out the upcoming members only video. Now, this is where I go over my entire portfolio. I'll be doing a video this weekend. I do it every weekend. You can see all the old videos as well. Once you become a member, you can get access to those. And it's just me. Okay, there's nothing else except me and the charts. And I'm going over my entire portfolio. I'm also providing 27 new stock ideas. By the way, this list that I created last week, that was on fire. Pretty much every stock up. Okay, great calls. And I'm basically focusing on the strongest sectors, the strongest industries within each sector, and then picking the best, in my opinion, stocks within those strong industries. So I'm doing a top-down approach, and I'm using Ichimoku to help guide me and just my past experience with trading. I've been trading for over 25 years. So if you want to get access to those videos, here's what you do. Right on my YouTube channel, click the join button. It's right next to the subscribe button, which, by the way, is free to subscribe. You can subscribe for free, hit the notification bell. You'll see these free videos. But, I think that you'll get more value from the members only videos. Click on join. You'll see that there are 3 different tiers here. Now, under Blue Cloud Supporter, you're helping support this channel, and I do appreciate those people who have become Blue Cloud supporters. You click the join button. You can request a stock or ETF be analyzed in an upcoming video. All right. You'll also get early access to some of the free videos that I do. All right. Now, next level up, Blue Cloud Trader. This is where you get access to the exclusive member only videos. Okay. You can also request up to 2 stocks or ETFs be analyzed each month. And the next and final tier is the Blue Cloud Legend level membership. Here, you get access to those member-only videos. You can request up to 3 stocks or ETFs be analyzed. You get access to some of my recorded day trading videos. You'll also, this is the critical one, the daily stock and ETF trades update. Now, this is every single day before the market closes. Okay, I am sharing all the trades that I placed that day. Once you become a member, there'll be a new tab that pops up next to posts, and it will look like this. We'll say membership. You click there, and that's where you'll find the post. Okay, so consider that if you want to learn a little bit more about trading, or just maybe you just want to, you're curious. Anyway, I will catch you all in the next video.